has been called black gold for more than a century. Even in 2025, despite all the talk about renewable energy, electric cars, and the transition to a greener future, oil still plays a dominant role in the global economy. From the price of food in supermarkets to the strength of major currencies, oil continues to influence almost every aspect of our daily lives. But why, in a world that is rapidly changing, does oil still control the global economy? To answer this, we need to look at three main dimensions: energy demand, geopolitics, and financial markets. 1. Oil is the lifeblood of energy. Let's start with the most obvious reason: the world still runs on oil. Transportation, shipping, aviation, and even many industries depend on it. While renewable energy is growing fast, it still makes up less than 20% of global energy consumption. Oil, on the other hand, continues to supply around 1/3 of the world's total energy. Think about it. Almost 90% of all cars, trucks, and ships still use gasoline or diesel. Planes cannot fly without jet fuel. Plastic, which is everywhere from your smartphone to medical equipment, is made from petrochemicals derived from oil. In short, oil is not just fuel. It's a foundation material for the modern economy. Until alternative energy sources can fully replace it in every sector, oil remains irreplaceable. 2. The geopolitics of oil. The second reason oil controls the economy is geopolitics. Oil is not evenly distributed around the world. Some countries are rich in oil reserves, while others have almost none. This imbalance creates power struggles, alliances, and even wars. In 2025, the Organization of the Petroleum Exporting Countries, or OPEC+, led by Saudi Arabia and Russia, still decides how much oil flows into the market. Their production cuts or increases can make oil prices rise or fall dramatically. When oil prices go up, economies that import oil, like Japan, India, and most of Europe, suffer higher costs. Meanwhile, exporters like Saudi Arabia, Russia, and the United Arab Emirates enjoy booming revenues. Oil also shapes foreign policy. For example, the United States, even though it has become one of the largest oil producers thanks to shale drilling, still keeps a strong presence in the Middle East to secure energy stability. Conflicts in places like Ukraine, the Persian Gulf, or Africa can send shockwaves through global markets because oil supply routes are threatened. This shows how oil is not just an economic commodity but also a political weapon. Countries that control oil can influence the global balance of power. 3. Oil and the financial markets. The third reason is money, literally. Oil is traded globally in US dollars, making it a central pillar of the financial system. When oil prices rise, the demand for dollars also increases, strengthening America's financial influence. But there's more. Oil prices are closely linked to inflation. When oil becomes expensive, transportation and production costs go up. This pushes up the price of goods everywhere, from bread to smartphones. Central banks then respond by raising interest rates to fight inflation, slowing down the entire economy. Investors also watch oil prices as a signal. Rising oil prices often mean strong demand, which signals economic growth. Falling prices may signal weak demand, hinting at a slowdown or even a recession. That's why Wall Street, the IMF, and governments across the world monitor oil prices every single day. 4. why alternatives haven't taken over yet. But wait, haven't we been hearing about the end of oil for decades? Electric cars are booming, solar power is cheaper than ever, and countries are setting ambitious net zero targets. Why hasn't oil lost its grip? The answer is simple: transitions take time. Building charging stations for electric cars, creating supply chains for batteries, and replacing oil-based infrastructure requires trillions of dollars and decades of work. Some sectors, like aviation, shipping, and heavy industry, don't yet have a reliable alternative to oil. Even governments that push green energy still rely on oil revenues. For example, Saudi Arabia is investing heavily in renewable projects, but it funds them with money earned from oil exports. This paradox shows that oil is financing the very transition that will one day replace it. But that, one day, is not today. 5. Oil in 2025, the new reality. So, what's happening in 2025? Oil demand is still rising, especially in developing countries. India and parts of Africa are increasing their consumption as their economies grow. Even China, despite pushing electric cars, remains the world's largest oil importer. At the same time, supply risks are increasing. Geopolitical tensions, such as the conflict in Ukraine, Middle Eastern instability, and even climate-related disruptions like hurricanes, can limit supply. This creates volatility, which keeps oil at the center of economic headlines. Meanwhile, the global push for renewable energy is reshaping oil politics. Instead of just selling crude, some oil-exporting countries are diversifying, investing in technology, real estate, and even entertainment. But they still use oil money as the engine for these investments. 6. The future of oil's power. Looking ahead, will oil always control the economy? The answer is no, but not yet. Experts predict that global oil demand may peak sometime in the 2030s. But peak demand doesn't mean oil becomes irrelevant. It means growth slows down, not that oil disappears. Even after demand peaks, the world will still consume billions of barrels every year for decades. Oil will continue to influence inflation, trade balances, and political power. The only difference is that renewables will gradually take a bigger share of the energy pie. Until then, oil will remain the master switch of the global economy. Prices at the pump, the cost of food, the strength of currencies, and even the success of governments depend on it. So, why does oil still control the global economy in 2025? Because it is more than just energy, it's the foundation of industry, the weapon of geopolitics, and the heartbeat of financial markets. Alternatives are growing, but the world is not ready to let go of oil yet. And until that day comes, every time you fill your car, buy groceries, or read about inflation, remember, oil is still shaping the future we live in.